Hello and welcome to Orchard Lending's podcast on this 12th of June 2022, looking at the current interest rate market. If you read the media, you'd think the interest rates are going up 1,000%, but there's quite a lot of specials on at the moment, cashbacks that you may be eligible for. So we're just going to run over that and just have a look at what's out there at the moment. First of all, let's assume we're looking at a property value of around 650,000. Something like that, you would need around 155,000 deposit. Remember too, though, we do have possible stamp duty concessions if you're a first homeowner, also possible government grants. So realistically, stamp duty 24,000 may not apply, and definitely check with your broker or your local government regulations to find out if you can get that stamp duty waived in any way. If you remove that, add on the grants, you'd only possibly need around $100,000 deposit if you're a first homeowner. If not, you can always borrow more than 80%. We're assuming an LVR of 80%, meaning you've got 20% equity. But again, you can borrow up to 98% in some situations, but you will pay a higher interest rate, and there is a bit more in requirements to get those loans. So let's do some funding based off anyway on a $650,000 property, and we're going to borrow this 80% LVR of $520,000. We use my little CRM software here, which is through my aggregator. This is one of the benefits of going through a broker is that we can do this in real time with you, so you can easily see just what current rates there are, what applies to you, help you work out your numbers. Okay, we're just going to chuck this in here. We're going to assume as well that at the moment, initially, we're going to go variable, and then we'll keep it to own occupied for the moment. Selected our lenders. We'll leave all this blank for offset, redraw, and all that. The purpose of this is really just to have a look and see what the lowest rate is at the moment and any cashback specials. So let our computer do its little thing. Beepity boop. Always takes a moment because this is literally pouring through every single lender, every single product. Yeah, there we go. Still far quicker than if you were trying to do it yourself. So we're going to search by the initial rate. Sometimes there might be an introductory rate, but we just want to purely look at the interest rate, lowest rate. Now you see the SLA here, that's the service level. That's the time for the lender to pick up from an application, 10 days. You see at the moment, a lot of lenders are definitely taking longer than previously to get loans done. Some of my very basic refinances are still taking 4+ weeks just with lender backlogs. So it depends too when you are looking at these rates. Sometimes do you want to pay a bit of a higher rate to get it done quicker? It's that whole thing about quality, price, speed. Which one do you want? You're going to pick one. Sometimes two if you're lucky. Okay. So you may not have heard of some of these lenders. So Firefighters Mutual Bank is our lowest at 2.14. But keep in mind that as we scroll down, we got places like Westpac, really good rate at the moment, 2.19%, and they have a 3K cashback. So you might say, well, is it worth the 2.19% with the cashback versus 2.14? So on our website, we've got a nice little refinancing center. And through here, it's really easy. Just use our calculator to work this out. I'm going to chuck in our 520,000 here. Leave all these charges just for the moment. We won't have an introduction. Well, there is an introductory for Westpac, but we're only interested. The thing is, if you did get that initial 2-year rate, you're probably going to refinance unless Westpac can offer a good rate after that time anyway. But for the moment, all I wanted to do was to show you the difference between 2.14 and 2.19. As you can see, there's not that much in it each month. So, $50 or so. So in that regards, as you can see, you might go the high rate with Westpac, get your 3K cash back, and happy days. Better Choice, they're a great little lender. I like using them. Their support's quite good. They're coming in 2.21. The reason you might have to choose Better Choice over Westpac is they have a bit more flexible credit policies. So as much as we always want to try and get the best rate for our clients, sometimes the best rate, they just can't get that product because maybe their credit background, the type of security, all sorts of other factors that go into it, that it's not just a cookie cutter approach. So you can see they've got their $2,000 cash back. And I wanted to bring up Citibank. Now, there's 2.24, but look at this. If you're borrowing over $750,000, you can get up to a $6,000 I'll zoom in for you so you can see that up to $6,000 cashback. So again, if we go 2.14, they're 2.24%. Let's check this in here. And as you can see, about 60, 60, 70. I mean, these are obviously, you're not going to borrow exactly 520K probably, but anyway, around that amount, not much difference. So again, you'd probably do the cashback, sit on that loan for a good 12 months, and then probably have a look then and see what other benefits are around. Now, the biggest question is at the moment, do I fix or not with all the future rate rises? So let's assume with this one that we wanted to go, let's assume that we weren't borrowing the 750,000. Obviously, we spoke about 520, and we're going to do the 2.19 with Westpac. Okay, repayments of 2011 a month. But let's see if we were to go fixed. We'll go all fixed rate, so this will bring up everything 12 months up to 3 years. Again, a bibbly boop, give it a moment. There we go, okay. So you can see now that there are still some really good, we call sharp fixed rates. Australian Military Bank, you don't have to be in the military. They work, don't be afraid to use lenders that you may not be aware of, especially if it's saving you good money. Kudos Bank, they like fantastic platform. I bank with them myself. So you can still fix about 2.99. And that's really the question at the moment. Do you fix, I mean, your 2-year rates are 3.24, but there's such a big gap. I mean, 2.99, if we go back here, if you were to fix, so you can see now you are getting a fair bit of difference each month in those repayments. What was that? So just looking back at that, sorry, a bit of a brief interruption. Okay, so back where we were looking at. So when you start getting to these difference in interest rates between fixed variable, you can see that it actually does start to make quite a bit of a difference. Almost, it's 100, 190 a month. So that's where fixed variable, for me personally at the moment, I think that that's enough of a discount that if you can get a good variable rate, probably better off staying variable over the next, you can have interest rate rises over the next 12 months anyway. Whether that will hit the 3%, that's the crystal ball. No one knows 100%. But you might as well make the savings now. And there's nearly always some sort of cashback or interest rate offer or something that the majors are running anyway. If you do want to fix, so that's what you're looking at. So 12-month fixed, you can fix around 2.99. And then if we scroll down, we'll skip to these 2-year fixed and 3.24. So in a little bit more that. And if you do want to compare that as well, we've got 2.99 here. We'll put 3.24 here. Okay, and there we go. So it's only an extra $100 a month between the 2.99 and the 3.24. But let's go back. That's 2-year fixed at 3.24. Your repayments are going to be $2,300 a month. We go back that if we went to the Westpac variable 2.19 with that cashback offer, about $320 difference. So would you want to fix for 2 years at 3.24? But as of today versus going variable, you'd be $324. Sorry, $320 a month worse off. Okay, so that's pretty much it. Just what I want to go through at the moment, looking at those rates, variables. Definitely give us a call. Our website there, Orchard Lending, orchardlending.com.au, orchardlending.com.au. Give us a call. We've got our little contact call back here on the left side of our page. We've also got our little form on our contact us page you can fill out. We're located in Surrey Hills, so you're more than welcome to pop in. We do require appointments if you're coming to see us. Office hours roughly not Monday to Friday 9 to 5, but always give us a yell anyway. We're generally around even out of hours. We know that during the day people working actually earning money, so they can't afford their mortgages. So yeah, that's it. So that's what we've got for the moment. Happy house hunting. Any other questions you got regarding mortgages and we're not real estate agents, but we can provide a little bit of guidance on property, at least give you property reports and suburb insights. Give us a yell, and happy days.